Hey Joe, Jeremiah from CDI here to give you a brief treasurer training to get started at Westbury. This is kind of a broad overview. This report that you're looking at here is called the trending report, and it really is something you'd fill out every month. It's pretty straightforward, and it really helps you get to the key indicators to monitor things at Westbury. But if you look here, every month you would fill out the items in the white cells here. And then everything that's in gray, you just leave be, and it will auto calculate things in the gray cells for you. So you just have to fill out items in the white squares every month. So you can see October through March have already been filled out. October 2019 was the start of Westbury's fiscal year. And so Westbury's year runs until September. I've hidden those cells. I can unhide them really quick, and you can see, just to not crowd the screen, I'm hiding it. But what we'll do is go through and fill out April, and that'll give you a better sense of how this works. So let's get started. There's really two halves of this report. There's this top half here, which is really getting at the co-op's bottom line. So is the co-op bringing in enough income to pay for the expenses so that at the end of the month and at the end of the fiscal year, the co-op has enough revenue to pay for its expenses? So that's the first half. The second half is really just listing off various account balances, past due rents owed, accounting for how much is spent on capital improvements and some other metrics. So there's really two parts. On the far right, the report automatically totals up the year to date, all the months that have been entered so far. So, for example, you can see the monthly income amounts for these various months, and then year to date. So, October through March, the total income over here on the right is $752,674. Same thing with the various expenses here. So, look to the right, far right hand column for year to date totals. And then the different categories are here, which we'll get into a little bit more. And then the first column on the far left is giving you a bit of a key on where to find the information to fill out the white cells that we're talking about. All right, so we can already, without even looking at your financial reports, we could already fill out some of these white cells here in April. For example, under your expenses, there's certain expenses that show up here that are the same every month throughout the course of the year. So one of those is your loan payments. That's not going to change for at least 10 years, or if the co-op refinances, that would change. So all you have to do, without even looking up data in the reports, although you could do that, is to just enter the same number in April that was in these prior months. So your mortgage payment, which includes principal and interest every month, is $74,535.58. Done. And you can see it's in the category below. It's now saying you have a deficit of 74,000, the loan amount, because we haven't filled in any of these other expenses and we haven't filled out the income. We'll get to that. But right now it makes things look bad. But once we enter more information, that'll change a bit. So we can already fill out the mortgage amount. Cool. There's some other fixed expenses every month that are moving out of the co-op's main operating account and being moved to escrow to be paid in chunks at various points throughout the year. Those include insurance. So every month, your lender, Rock USA Capital, is taking $1,000 out of your account and putting it into an insurance escrow to pay the policy when it comes due once per year. So all you have to do in this report is put the $1,000 amount, like we just did, and you're good there. The same thing applies to real estate taxes. You can see every month the co-op out of its operating account moves $9,166.67 from operating into a tax escrow to pay the tax bill once every 4 months is when it's due in the state of Vermont. But all you have to do for this is put in the monthly amount. Done. We're making progress already. And then lastly, every month the co-op is taking $2,083.33 from the operating account and putting that money into a reserve fund for big capital improvements. So all you have to do here is put $283.33 and you're good. In the lower half of this report, we'll actually look up and report out the balances of those various escrows that you're putting money into. One of the things the treasurer does is reports on what those balances are and how they change, and you can track them over time. That's what this section of the report's doing. We'll get to that. So we're already halfway done the top side of this report, and you can see here that to fill out the rest of these cells here, that we need to look at your financial statements and particularly a profit and loss report to fill out the rest. And so what we're going to look for is the total income amount to the co-op for the month of April. And then there's 3 big parent categories of expenses. And we're looking for the totals in those categories: administrative, utilities, and operations and maintenance expenses. And when we put in the total income and then those total category expenses here, then we'll be able to know how much money the co-op has made or lost as a surplus or a profit. Down here, it'll calculate it for us. So just by putting those 8 or so numbers in here, you can get a good indication of how the co-op did for the month. And then by extension, we'll be able to understand how the co-op's doing from October through April, automatically totaled up here. And we've already learned quite a lot already. So let's pull up the co-op's financial statements and try to do this next section. Okay, so this is your financial statements produced by your property management company. And you can see it's a 92-page document. There's a ton of stuff here. So it can be a little overwhelming, but for the purposes of this overarching report, it's really not too bad. To fill out these first couple cells that we're talking about, we don't have to go too far. So we're going to look for a profit and loss statement, if you remember the key, to find that information. So I'm going to scroll down here. Oh, profit and loss. Yeah, you can use this. You're really looking for April data, so look for profit and loss, April 2020. And let me zoom in here. And yeah, so the figures that I want to report on the cells of that report are total income. Our total income, which you can see here. The total income total up includes lot rent, the apartment rent, some interest. But for the broad strokes report, you just need to put in $124,056.92 there. There, done. Let's look for these 3 categories next. And you can see there's administrative expenses here, which includes things like property management fee, legal expenses, meetings, sometimes postage, internet. You can see the balance there. So let's put that in next. So administrative for the month of April, $5,810.04. $810.04. Did I get that right? Yep. All right, next we're looking for utility expenses. Let's do that. And they're next. And yeah, utilities, pretty self-explanatory, includes things like electricity, water, and you can see the total that we're going to put on the report is $21,932.06. Now, one thing just to be aware of, Westbury only has a water bill every 3 months. So this is a huge number, $20,000. That's 3 months of billing. So it's all hitting in April. So it's going to make April's bottom line look kind of bad. But it balances out by the months where there isn't a water bill. So just something to be aware of. But for now, all we have to put on that spreadsheet is 21,932.06, the total of the utility. 21,932.06. Just like that. All right, now we have to look for the operations and maintenance, and then we'll be done with the first half of this. And that's the next category here. And you can see it includes things like landscaping, septic pumping, trash removal, sometimes snow plowing, water testing, all that kind of stuff. And the total amount that you'll be putting on the report is totaled at the bottom of this grouping, and it's $18,004.60. $18,004.16. Poof. Oops, that was supposed to be 60. That's easy to change. And yeah, now you can see the income coming into the co-op minus all these expenses, the ones from the report, then moving the insurance escrow, the taxes, and then the capital improvement reserve savings amounts. You can see the total expenses before loans is $57,996 here. And you can even look over to the left and see the general budget for these various expenses per month all totaled up is $40,202. So you can see that April was quite a bit higher than the monthly budget for the total expenses. Again, that's totaling up all these categories here. You can even check that, see. And we can kind of already see just by looking at that profit and loss report that the big culprit is the water bill that all 3 months were billed all at one time in April is driving that overage there. Then, so income minus all these expenses minus the big loan payment of $74,000. At the end of the month, Westbury had a deficit of about $8,475, and it's automatically highlighted in red. You can see February and March, those were surplus or profit months, which is good. So those are highlighted in green. So yeah, Westbury's had a bit of a rough year because of certain things that we can get into. Really, it's been in the past a lot of electricity and septic related stuff. This month is more driven by water, but so you can already see your co-op's bottom line just by doing that little bit of work. Now you can see that this report also totals up automatically for you the year-to-date amounts. So the total income, all these months are added up here, all these various expense categories are added up here, and then the bottom line, despite some of these deficit months, Westbury does have a surplus year-to-date of about $19,550, which is better than a deficit. But, and here's something to keep track of, this line here that's called debt service coverage ratio, that's very jargony bean counter language. What that's getting at is in Westbury's loan agreement, at the end of a fiscal year, Westbury has to pass a budget and try its best to hit a debt service coverage ratio of 1.10. Kind of convoluted sounding, but what that means is that Westbury has to have a surplus. So it has to have an amount here that is 10% or more of its mortgage payments. And so right now, $19,550 of a surplus divided by to get the percentage of the mortgage payment of $521,749. If you do the math there, that's about 4%. So what this is spitting out is essentially the 1.04, disregard the 1. What that 04 is essentially saying is 4%. So Westbury is short, has less of a surplus than is required in the loan agreement. So that's a bad sign, but it is very common during winter months for co-ops to get a little under where they need to be and then recover in the spring and summer when there's less things like plowing going on. So that's something to track how this changes as the next couple months progress. I wouldn't focus too much on the monthly amounts because you're going to have months that are really good, like here, February, the surplus here of 13,902 is 19% of that month's mortgage amount of 74,000. So you're well above the target there, but then you have months where you're below because of deficits. Don't worry about the month ebb and flow. What we're really trying to get at is that the year to date, by September, we want to get this 1.04 to inch up to the 1.10 amount. The surplus, that's 10% of the mortgage here. So we'll have to track that as we go. Okay, let's stop there. I'll stop the video. We got through the first half, and then I'll create a second video for the second half of the report so you can take a breather, and then as you're doing this in various months, you can go back and rewatch, replay certain sections. So thanks, and let's go on to the second video.